session of September 11th, 2018. Normally at this point we'd stand for the Pledge of Allegiance. Instead, I will ask you to join me in a moment of silent reflection on the events of 9/11 and their aftermath. Thank you. Good evening and welcome. This meeting is being recorded and televised by Chelmsford Telemedia. If there's anyone present who is recording or planning to record this meeting, would you please so indicate at this time? Seeing none, we have no minutes to approve tonight, so we will move directly to the first item under new business, which is the discussion of the final report. You have a couple of documents in your packet. The outline of topics, which we'll go over in a minute, and also the first draft of the section on the various exemptions. I'll apologize to getting them both to you a little bit late today, but that was actually when I had them. I think the first thing is with the outline. My purpose here is not to, tell you what to do. I just want to make sure we're not overlooking anything. So as you go through it, if you see something that you're particularly interested in or you want to write up, go ahead, and I would suggest that you, whenever you feel like you're at a stopping point, send it to the entire committee. You don't need to send it through me. We're all on the same email chain. And that'll give people a chance to get a look at it and to think about it before the next meeting, and perhaps even make their own additions. It may stimulate thought on their part. Any comments, questions, suggestions? Evan?
Two suggestions and just a couple of quick questions. Jotted down here, methodology and process, outlining or itemizing who we interviewed, either in the room or who we brought in.
I had been thinking more in terms of subjects. For example, interviews or presentations from, say, ex-selectmen or from members of the finance committee. I was thinking I would try to integrate their remarks.
I get you within the
into
text.
the other sections.
Okay.
But yeah, it might not be a bad idea to just have a review of the people that came and spoke to us at least, and that could go up into the introduction somewhere.
The other one was there was a lot of conversation about the two previous committees and reports, and a lot of people who spoke to us were either asked or made comments about those reports and conclusions or findings. I'm wondering if this report needs to kind of put those two to bed, or should attempt to put those to bed.
Well, so the review of the assessing process, I think, is a deliberate attempt to put to bed the 2004 and the subsequent 2005 reports. The 1998 report, in my mind, was largely characterized by its survey of local businesses. And we talked about that a little bit here. 25 responses of businesses only is hardly an adequate cross-section, either of the town or even of the town business community. I don't feel the need to put that in writing.
I just kept hearing about them.
You don't make, yeah, your point is well taken, and maybe if you wanted to do like a review of previous reports or something.
Yeah, I'm not suggesting it's a review. It just keeps coming up as if it's relevant. I mean, we partially introduced it into our process.
Well, I think it's always a mistake to forget the past. So, maybe we should have.
I just throw it out there.
A comment or two on both of those.
Well, I'm just wondering if we should have part of the reports so that people can refer to something if necessary. I don't think so, Mary?
Are those reports available online?
I don't know if they're online, but I thought I had forwarded them sometime ago.
I'm pretty sure the 2005 is still around. The 1998 was harder to find.
Yeah,
Okay, maybe we can talk about what goes up, kind of as we complete this process too. And yeah, if we can give people access to the original source.
Or let them know where they can find it.
Yeah. Mm-hmm.
Okay.
All right, and then just the questions on 3H, 4D, 5D. What did you mean by,
Okay. The
Distribution.
effect of the split,
Yeah.
the rate splits. So this is something, Tom, I wanted to bring this up with you a little bit. You've mentioned a couple of times in the past, and Frank seems to agree with you, that the valuation of an individual business would be negatively impacted by a split rate.
The business property.
The value of the
Real
business
property,
property.
real commercial property.
And if you could do just kind of a paragraph or something, kind of laying out what that mechanism is.
Absolutely.
Um,
I had sent that out to the group prior. I can reformulate that.
Yeah.
Yeah, a few weeks
Or
ago.
just, okay, I'll take a look.
But I
again.
can, it was perhaps maybe not the right perspective for this report, but
Well, I think we're going to touch on it a little bit later with some of the work that John, that I forwarded to everybody from John, I think bears on that a little bit. And the other thing I think that bears on it a little bit is the examination of the CIP valuations from other communities, that scatter chart. It doesn't seem to show an inevitable decline. So I think we should make a point of talking about it, and then possibly, and at least offer some explanation for how that connects to what we see on, I mean, I'm thinking of that as kind of a microeconomic point of
Yep.
view,
No, it's-
and try to connect it to a macroeconomic point of view. So again, just to kind of deepen the understanding of where the potential difficulties are, if nothing else.
Yep, no, absolutely.
I know I'm going to sound like an economics professor, sorry, I can't help it, but the phrase "all else being equal" has to come into play.
Okay.
Because, what Tom says is true, all else being equal. And all else is never equal.
you're writing that section?
But yes, our one-handed economist here. And then the distribution of the properties, I have a half-finished chart that I think is in your packet. It's at the very end. I didn't want to get into it too much, but I have begun to look at, this is something that you and I talked about, how many $50,000 commercial properties are there? How many $100,000 commercial properties are there? They do the same thing with the residences. Partly this builds on some comments that we heard at the public input session. I think there's a desire to try to understand how changes would affect people at different levels. But it has struck me, and again, I think maybe we'll talk about this a little bit more, but one of the other questions that's kind of been raised, and I don't think we've really heard a satisfactory answer to it, is why does classification not seem to drive business in Billerica out, and at the same time, Chelmsford, when it doesn't have it, it doesn't seem to be any more successful in attracting it? I think one of the potential answers is that you get different sorts of businesses. And if we look at those distributions, there might be some information there as well.
Okay. I like number 8, I like that idea. That's kind of a
So,
catch-all.
yeah, that's the other thing. Yeah, to try, it has finally occurred to me to try to use a SWOT matrix, strengths, weaknesses, opportunities, and threats, to talk about some of the value judgments here. I think at the end of the day, we're going to have 8 opinions about should we have a split rate or not. But I think I do feel like there's some general agreement about what the nature of the opportunities are, what the nature of the threats are in general, and I'm hopeful that we can put something together if we use that format where we can all kind of sign on and say, this is what you should be looking for.
Is everybody okay with the numbering of the different topics?
Yeah, and if you're not, feel free to change it.
But in terms of order, or?
Yeah.
What are you proposing?
I'm not, I'm asking the question.
Okay,
Just wondering if anybody thinks it should be, residential should be before small commercial exemption.
I don't think it matters.
I
I think it's numbered appropriately, quite frankly.
Okay,
yeah, I think particularly given that the small commercial was the subject of this ballot question we had, that almost should,
Mhm.
very few people in the world out there know anything about a residential exemption, except maybe if they were reading the first page of the Boston Globe today, where it was mentioned in an article.
Thoughts?
definitions of each category. A lot of people don't understand the definition, a small definition, a very concise. Other than,
For sure, for the small commercial exemption and the residential exemption, I think we will want a briefer summary than the MGL language describing what they are. For the split rate, I think, we can just start with the calculation of a rate, and I think that will become apparent.
and in the split rate, are any of these topics spelling out the fact that it's not gonna lesser the whole pie? The pie's gonna be the same. Where do we bring that out?
Well, I think that's true of not only the split rate, but also the small commercial and the residential exemptions, right?
I think that's an important
I agree with that.
general sense to bring out.
Maybe that's part of 7, understanding the pie. I mean, we're assuming that people even understand what makes up that pie.
Well, I guess, is that the sort of thing that should go in the introduction then?
I would think
Right at the
it
beginning.
would come up somewhere. I mean, assuming we're having some verbiage with each of these things, I think it'll come up in that discussion.
I think if you go back to the presentation, the
Yeah.
public input presentation, I think, the format is gonna follow a lot of that language pretty closely. And I believe it's mentioned in all 3 of those, that it's not actually
it was
increasing
very simple the way you,
the revenue.
wherever I have that it's just a statement, that it doesn't, discussing this doesn't increase
Yeah,
revenue.
it's a simple statement.
Yep.
Yeah, it's,
Simple math.
and I think you do that where you talk about, if you start to talk about split tax rate, that should be the first sentence under
Yeah.
there.
Mhm.
Who gets a copy of this report?
Anybody who wants one, we're a public body. Yeah, we might also have a little bit more language about it down in 7 as well, though. I don't want to get too far away from our original purpose, but I think the way that, especially the way the mission statement is written, we have a fairly broad remit here to talk about tax relief. And I think that's something, especially with the 129 stuff that we did early on, that's something that we spent a noticeable amount of time on, and I'd like to see that documented.
What you have titled as Section 3 split rate might be a more general topic, like you had in the presentation, classification.
I actually struggled with that a little bit. About half of what's listed there under split rate started out in the introduction as what is classification, because the 2 terms get used interchangeably, but it really is true that classification is broader than just having a split rate. And then the exemptions and deferrals are kind of yet another thing, although in a way, it's a method of classifying. It's classifying your taxpayers rather
Well,
than classifying.
then maybe you need something that talks about what, I mean, this,
Yeah,
to me, this page in our presentation, what is classification, that consists of about 3 sentences,
Right.
belongs in there someplace.
yeah,
And-
my preference, or my initial thought is that needs to go up front early on, so it kind of sets the tone.
Well, maybe it goes in between review of the, you have another heading on between review of the assessing process and
Mhm, yes,
classification,
yeah.
what is it?
Mhm.
3 sentences.
Yeah.
Do you have a sense as to what sections need the most work? Oh, I mean,
Well, the exemptions, quite frankly, that's been kind of a slog. You have kind of where I got to by around lunchtime today. I think it's okay. That needs to be reviewed. A lot of the rest of this, most of these topics are things that we've already gone over at some point, and in a lot of ways, they just kind of need to be stapled together with maybe a couple of connecting sentences or paragraphs. Again, I think, if you want to take a stab at one or more of them, just go ahead and put stuff together. And again, if we get a little bit of overlap, that's fine. We can always collate at a meeting.
So are we looking at something like a bulleted format that we had in our public presentation at the end of the day, or are you looking for something in detailed prose form?
Well, so yeah, the exemptions, I went with kind of a prose format as opposed to the table that Frank provided for us, or the kind of chart that I put together early on of the amounts of the various exemptions. I think really all three are appropriate. But especially for the exemptions, it was proving really difficult to try to summarize it in a table format. There were too many columns, too many rows, and the print was getting really small to try to keep it on a single page. So I just kind of gave up and broke it into paragraphs. And I'm happy again for other people to take a run at editing that sort of thing. See what you come up with. It's hard enough that. My guess is we'll need to include all three formats for different people to get a good grasp of it. Different people are going to read the prose better than the tables, and some people like the charts better, whatever.
Yeah, I was.
It's dense.
I'm looking, it is dense, and, to explain how they work in a sort of a prose thing works fine for me. I guess what I'm thinking that maybe to provide a table that shows how many people took advantage of this in Chelmsford, what the cost was that's reimbursed by the state, and what the cost is to the town of Chelmsford. In a table form.
Right, and that is what Frank started us off with.
Yeah.
What I was having trouble fitting into that table format was the concept of what adjustments are available. Once you start to break down clause 17 into 17 and 17B and C and C and a half and D, the table gets messy. And in some ways, it's easier just to say, this is the thing that Chelmsford has selected. Here are the other potential options. But I agree with you.
Well,
The data could go in a table.
Yeah, you can explain all of that. And then at the end, what are there? You've got how many? I list 10, and there's 10.
a couple more.
Okay, so you can have a 10 line,
yes.
And a 10-line chart that says, with number 1, we had X number of people take advantage, and this was the cost. Just to get some feel for.
Exactly, and Mike and I exchanged some emails, and he showed me the 10, and then there were another 4 or 5 that lacked clarification, and frankly, I couldn't help. They're very obscure exemptions.
Well, we knocked out the water in the sewer.
There you go.
That's right. That's the best
That's
answer
definitive.
is not
That's right.
applicable.
2 with 1 shot,
Are those
exactly.
the 2 at the end here, the double personal?
No, I still
It
don't
was a
get the double
21C, well, I won't bore you with it, but essentially, if the town had adopted a certain provision to allow debt from the sewer to go as part of the levy, then that would enable another exemption. Yeah, I'm going to spare you all that.
But that,
At any rate,
could that ever apply in Chelmsford?
probably not, probably less reasonable at this point.
Okay,
Um,
so there's
That's the
no
sort-
reason
that-
to include.
Well, that's
No,
the
but that
sort of
was
thing, we
everything
might
I-
just throw a paragraph in there that says, this is what it is, so that if somebody doing their reading 3 years from now stumbles across it, they don't think we overlooked it or
Right.
missed it, but just say it's not applicable to Chelmsford at this time. And we could leave it out of the table then.
Yeah.
Maybe the table should only include the exemptions that are actually being taken.
Well,
So
We're
that
going to
you
get some
can-
clarification from the DOR and some of the other ones
Yeah.
we talked.
Well, yes and no. I mean, you might put in the table Anyway, well, we can
Yeah,
get
well,
the
again,
table going.
take a stab at it and see what you think. Again, there are some options that haven't been adopted, and part of our charge was to provide the board with some understanding of, you know, what kind of wiggle room do they have? What kind of adjustments can they make going forward? And if they do make these adjustments, what are the potential costs to the town? That, again, that just gets messy in a table format, and it might be better in prose. But I think we should include it.
By this outline and all the other information we have and the SWOT, does this lend itself to that we're not making actual recommendations? We're going to be using this format instead?
Yeah, that's my hope, right, is that the SWOT will give us a way to talk about value judgment without having to be binary, yes, no.
Right? I think that's wonderful. I think it's extremely explicit. It explains what we need to, gives them the information that they need to have, and that's what we're charged with.
So I would say one other thing that I think you should all consider, and I think maybe we should talk about it in a couple of weeks. And that, so the charge of this, the duration of this committee lasts until December. Is anyone uncomfortable about talking to the selectmen as a member of the committee? Would you rather ask that the committee be released after we deliver our report to the selectmen, and then you'd feel like you had a freer hand to go speak to them, kind of based on what you learned
I
here?
would prefer that.
I don't understand what you're saying.
We could do that as citizen as well.
Committee's disbanded
Right.
after the report's completed, basically.
Instead of, yeah, it was a historical accident that our duration was through December. The feeling at that point was we'd be done in December, for sure. And they didn't want to leave us out early. I have some reservation about going in front of the selectmen and taking sides on something like this as a member of the committee. I'd rather focus on delivering a report that treats it as fairly and evenly as possible.
When
But-
would that actually happen? When you're referring to the
Well,
committee
I
making a
would, so
report?
we'll do a report on October 1st. But what I'm envisioning is that the takeaway of that report is that you need to make a decision directly after town meeting, especially if you want to include a residential exemption. That's what we've heard in terms of giving the assessor's office enough time to deal with it. So one of the recommendations would be deal with this early. But if we're still a committee, then should we be going in front of them at the end of October and
You
saying,
keep saying we.
yes or no?
Are you referring to we?
we, the 8 of us around this table?
As
So,
individuals.
so
Yeah.
wouldn't that take place on Monday, the 1st? Is that when that's scheduled?
So I was not thinking that they would ask us for individual opinions at that point. What I'm saying is that if you wanted to be free to deliver an individual opinion, say
I
when
get
they
you, yeah.
when they do their consideration later in October, then maybe we should talk about should the committee disband after we deliver the report.
I think we should disband.
Well, I don't think we have to make the decision now. But think about how you'd prefer to deal with it.
Only because it gets tricky being a liaison from the finance
Mhm.
committee,
Right.
for one, personally. And two, we've done what we were charged to, and we can speak to them at any point, because we're citizens anyway, if we so choose,
Certainly.
if we feel strong enough.
Yeah, I don't think there's anything that restricts us whether the committee continues to exist or not. There's nothing that restricts us from talking to selectmen either one-on-one or at a meeting.
Right. Unless there is something that they would like us, that they would task us with in addition, that we don't know about.
Right. We might wait until the 1st to ask for a release.
I would, goodness, I would think, based on experience, I would think we get a concession, not concession.
Consensus.
Say it again?
Consensus.
Consensus. Had most of the letters. Consensus. And that would, I don't know whether we will or we won't,
Yeah.
but that would negate a minority opinion.
Agreed.
I've served on committees which
Had minority reports.
had a minority report, for the record, was quite erroneous. So it would be better if we, I guess I would say it doesn't matter whether we disband or not, because if you got a minority opinion anyway, sometimes you get one even when you have consensus.
Okay.
So that to me wouldn't matter.
Okay. And again, I think if we come out of this with some kind of consensus, then, yeah, in a lot of ways, that whole
And
discussion
I don't know
becomes
whether we
moot.
will or we won't.
Right.
But if the ultimate answer to all of this gives the selectmen a choice of A, B, C, and D, that should automatically drive a consensus. Should. Maybe not, but
Okay.
should.
Yeah, I don't,
Where if you come down and say, because I don't think it's our charge to tell them what to do. Our charge is to, this is
yeah, educate.
your choice. This is your education.
I agree.
The other thing I'd like to qualify is, or clarify, this is going to be a 20, 30, 40, 50-page document. This is not
Something
going to
like
be, this is not going to be a series of,
Oh, PowerPoint pages. Yeah,
PowerPoint.
no, I agree with you. This should be a real,
because I've served on both. And sometimes you have to do it with PowerPoint because it's going to town meeting or what have
Right.
you.
no, I think we can do better than that. I think we can go a little bit deeper.
Because we
With
had an
bullet points.
enormous result presentation for the Charter Review Commission. Because of the
Right.
nature of the beast, if you will.
Yeah.
But we reviewed every word.
Well, I do think we'll want to,
And I think you're gonna have some of that. kind of
distill it
business here.
down a little bit for the presentation to the selectmen on October 1st. But
Okay.
I think there should be a real report that underlies the presentation. Yeah.
So are you gonna have both? Or are you gonna have just the big,
Just because slabs of word on a screen don't work that well, I think we'll have to go with some bullet points. But yeah, that's not what I'm focused on. I'm focused on the slab of words, frankly. That's what
Okay.
I want to see come out of this.
see, I've
A
been
real report.
going along for the ride for most of this time, and now you're forcing me to
I'm looking
one
forward.
of the things
I'm
I've
looking
learned.
forward to it.
One of the things I've learned on all these years is maximum grade for minimum effort. It got me through Lowell Tech. It's still serving me well.
You and Edward, my son.
Okay, I'm done. Thank you.
I'd like to make two observations. One's a big thumbs up, the other's a kind of a thumbs down. The thumbs up, I really like this outline. And the reason why I really like it is because it's just going to drive a report that's going to be very factual. I like that. And I actually like the SWOT idea
Yeah.
as well. The thumbs down, I'm going to suggest you're making a mistake by just telling people to go off and write whatever sections they want to write and don't worry about overlap. I think we need to, you don't necessarily have to assign things, but maybe people could start signing up for things.
Okay.
I'll make suggestions. I'm going to suggest right now that Evan do 7A and that Tom do 7D. And I'm going to volunteer to do section 6.
I would rather do 7A than 7D. So
And I'd rather
I
not
think,
write
I like the
anything.
idea of everybody putting in their 2 cents. I think it's important for all of us to speak our mind, and we'll take the appropriate commentary out of each.
Well,
Item.
okay, I tell you what, how about everybody gets a week to do whatever you want, and then,
Fine.
and then next week, we'll see what kind of
Yeah,
coverage we
that's-
have, and then assignments need to get made. Is that,
Yeah, I would also suggest that people at least consider conferring with you as to what your intent was, because it may not always be clear. I mean,
Okay.
because I mean,
yep,
some of these descriptions, you know,
Yes, they're a
individual
little-
items are very brief.
Yeah.
And that's okay for the outline, but it may
Yeah.
not be clear to everyone exactly what you were
Okay.
looking for.
That's why I had asked
sure.
of the sections and subsections, which ones do you think need the most work? A lot of it is charts and stuff that's already passed
Oh, I
across the
said 6, I'm
desk.
at 5. I was volunteering to do
Yeah.
5.
Me too, because it's right here.
Wait a minute, what? No, I'm saying I was volunteering to do 5, the residential exemption.
So I think you have like probably the best handle as to
Recommendations.
where the status is of most of these
Yeah,
sections
yeah.
and subsections.
All right, let's just kind of go through them real quickly. The from the split rate down. Calculation of the single and split rates, I had intended to largely use Frank's examples. There's examples of those already in the PowerPoint presentation, and I don't think it needs a lot more wordsmithing. The historical summary of the split rates in both Massachusetts and Chelmsford, that's a little bit broader topic. We have a timeline that Frank provided in his original primer to the group. I have started to write that out a little bit. The Chelmsford section, I haven't begun really to engage with yet. We know what the actual rates were. Again, that was in the historical rates and levies. I think that it was an attachment provided by Frank. So we can look at that, but that should also be combined, I think, with the testimony that we heard around that.
So
Right.
what's the benefit of the summary of Massachusetts? Because we struggled with that throughout the process.
Well, I think one of the things we talked about was we don't want there to be any doubt that there is not really any problem with having a split rate. And I think going through the timeline that Frank provided made it very clear that the Supreme Judicial Court does not see a problem with a split rate.
So it's a high-level summary,
Yeah,
how many have it.
right. And kind of also just there are probably 6 or 7 different distinct dates where something happened that's notable and again, for somebody who comes on a year from now or 2 years from now and tries to follow the breadcrumbs, I'd like to be able to give them a little bit of a trail there. The table of the effect of split rates, again, I think we've got the tax scenario calculator that John originally put together, and that's based on, in part, something that Frank had provided. There's a similar one from DOR. I think it's sufficient for it just to be a table. The review of the hypothetical split rate since 2007, I thought we'd work with Mary's spreadsheet on that, both for the residential and for the commercial example. The question there is, do we want to try to do more than one property? Right. This is where we were asked at the public input session to consider the effects on, the effect on a condo is different than the effect on a $500,000 commercial property is different than the effect on a 20 million industrial property. The review of the
Let me work with that and see what we can
Yeah,
get down
mhm.
to a
Right.
table that's readable.
Yeah, legibility will be a challenge in some of these cases. I mean, you can kind of propose variance indefinitely, but at some point it just overwhelms instead of enlightens.
Yeah.
The review of the split rates in other communities and the initial split used in other communities, I thought would largely be based around the work that John and I did looking at other communities. I think we have an answer to what kind of the average, whether mean or median, initial rate that's been chosen by other communities over the last 20 years. That was one of the things we were specifically asked to provide, so I think we can do that. And the effect of the split rate then, as we talked about a little bit earlier, there are some theoretical considerations, there are some real world examples, and I think they can be stitched together in a way that is enlightening. What we're not talking, what's not included there is kind of the testimony from Amina on the effect of the new tax laws. That's a subject that didn't really fit into any one of these things, and I don't know whether we want to try to split that up between things like the split rate and the residential exemption or the small commercial exemption. If we want to if we just want to have a couple of sentences that directs people to the video if they want to go review her testimony.
I'm sorry, go ahead.
I think the thing is, and it depends how you write this up, but when you're talking about split rates in the communities, initial, whatever, I think we need to talk about how many towns in Massachusetts have adopted this. The fact that it doesn't seem to be related on their split between commercial and, that it's all over the place. Remember, somebody came in and asked us, how many communities with less than 20% commercial have a split rate? And when we looked at some of the nearby communities, we found it was all over the board. And I think we just need to talk about that in some of the, what we're writing. I assume this is coming out as a prose thing when we're all done, and we need to talk about some of those things just in.
No, that relationship between having a split rate and the CIP share of a community, that is something that we reviewed here. I mean, we've looked at data, certainly the information is available. That should be added into that section.
I'm wondering if tomorrow night, Mike and I are going to be meeting with the Finance Committee to let them know basically the format that we're using and why. And maybe we could ask Amina if she could possibly put together or send to me or talk to me and I'll put together something that would just generally reflect this, the tax effect of some kind.
I didn't make any attempt to think about really appendices. And something like what she presented to us, something like what the Worcester Research Bureau presented, something like what we heard from the Leominster assessor. That might be the sort of thing if somebody wants to take a stab at writing it up, or at least writing a summary of it, we can put it in an appendix, and we should be able to link it to video, right? So people don't have to take our word for it. I don't know how long the video will be available, certainly for the next 3 to 6 months. 5 years from now, anybody's guess. But yeah, I think we shouldn't be bound just to prose or just to the printed page either.
If you're going to add videos to this,
Well, that's why I think the proper place is an appendix for people who want to do a little bit further digging. I think some of what I heard from the Worcester folks will inform kind of the way I think about some of this stuff and some of the data that I try to look at, some of the charts I try to put together. Same with Leominster. I think I'm not sure it's directly online to the question of certainly a split rate or residential exemption or exemptions, but there's certainly a lot to think about there. And maybe that comes in a little bit somewhere in economic development, or one of those additional approaches. I don't know. I haven't kind of sorted that out in my own head yet.
I have no objection to linking to videos, but for me anyway, I got more out of actually reading the reports they were talking about than what they actually said.
Do we, yeah, again, I did not try to put a bibliography together. Do we have a consensus on kind of a core bibliography? Because I didn't, for example, that MIT report that I think you, Evan, and I all found. One of the things the guy says in it on like page 5 is that no community has ever gone to a split rate and gone back to a single rate. I don't care how good the rest of the analysis is. I can't take it seriously.
Some of it's opinion-based.
Well, that's just
Well,
factually
well,
incorrect.
Well, actually, but now that you mention it, one of the things that bothered me was I actually looked up that guy and his curriculum vitae. He listed something like, I don't know, I'm going to say 50 different studies that he worked on. He didn't actually list that one.
Yeah, I mean, I think there are some standard reports. There's the 2004 report that I think from DOR that the selectmen originally put us on. I think there's some reasonably informative stuff online. Again, mostly from DOR, but even that 2004 report's a little bit dated, and in spots a little tendentious. I mean, I don't know what we want to do about an outside reading list because I certainly would be happy to recommend things for other people. Again, taking the view that this is not just one time, but there are people. Hopefully, it'll be a reference for 5 or 10 years as people try to get up to speed on a topic. But I don't have a list right now. Small commercial exemption, just to go through that quickly. The conditions of exemption, that's going to be some boilerplate and again, an attempt at distilling it down into human language. A calculation of the commercial rate with exemption, again, that Frank's given us examples of that, and we'll include those. The table of the effective exemption on the FY18 values, we'll use the scenario calculator again on that. And then the distribution of CIP properties, as I said, just trying to get a sense of how many small, medium, and large size entities are there out there in Chelmsford. The residential exemption pretty much follows the same pattern, and the intent is largely the same. The exemptions and other reductions, the review of exemptions, you have that first draft in front of you. It is certainly a first draft. There will be some changes made, but that's basically what it's going to look like. The FY18 amounts of exemptions and reimbursements, we have that information from Frank. The question is how to organize the table, and again, if a couple of people want to try that. The historical amounts of exemptions is just a data download, again, from DOR, and you've seen the charts on that. It kind of is what it is. And then the possible additions.
What do you mean by that?
Well, DOR will give us how many people have claimed a 37A deduction over the last 10 or 15 years, going back to like 2004, and what the amounts have been. So we can show, trend lines to see if something is taking off in popularity or something's falling off. The possible additions and extensions of the exemptions, you'll see in the write-up that I've done. I have included that in prose. I think we should also talk about is there kind of a more eye-friendly way to present that to the selectmen if they're interested. And then additional approaches. The growth of CIP sector versus via economic development. That's essentially the 129 discussion that we had earlier, and it looks like Route 40 will play a role in that discussion as well. The combinations of the split rate and the small commercial exemption and the split rate, small commercial exemption, and residential exemption will go back and use the tax scenario calculator for. That's
As amended.
as amended. That is, you know, that's been done already. That's what we put up there for the public input session. I put it down there just because I didn't know where else to put it. And then the reduction of levy is again, not something that we particularly talked about, but I think for the sake of completeness, Worcester certainly made the point that that's an approach. And one thing we can do is just to give people a sense of size. We could talk about, if you do a 1.1 split rate, how much of a levy reduction does that equate to? That is, if you wanted to deliver the same benefit to the residential property side, how much would you have to cut the town budget by? And as I took a stab at it the other day, I think it's something like $2 million a year. So we can at least give the selectmen a sense of what they're talking about when they say a 1.1 split rate or a 1.5 split rate, or forget it, we're not going to do a split rate, we're going to cut the budget instead, or we're going to, we're going to do other things with the levy. At least give some sense of how big an effect you're talking about having. And that, I think, dovetails with part of what we talked about with the Route 129 stuff, having an understanding of what's realistic. If you talk about we're going to relieve the residential burden by growing the business sector, what can you reasonably expect to do in terms of relief for the residential side?
I just comment, you think, on what you've listed under 7, B and C, the combinations, I think it'd be
Yeah.
appropriate to talk about those, create a
Yeah,
section
maybe just-
in between.
Yeah, other
Between,
scenarios, combined
well,
scenarios or something.
We've talked about small commercial, I mean, those aren't gonna be those big sections, residential, and combinations of,
Yeah,
and
Okay.
that would be a section separate, that
Yep.
comes above talking about
Before the
exemptions, and
exemptions,
then, additional approaches that needs
Right,
additional approaches to
something else.
lower
yeah.
taxes, whatever you're
Right.
gonna call it, to this, when we write it up, okay.
Do you envision doing more than one SWAT?
I'm
mean,
so-
is
I'm
it- is
sorry,
it-
I'm
is
gonna
it
have
for-
to
for
ask. I don't know
7A?
what a SWAT is.
Strengths, weaknesses, opportunities, and threats. So if we implemented a split rate, I think we're gonna have to break it down a little
So
bit.
7A
Like,
through D, a SWAT for each scenario?
Why not a SWOT for each category number?
Yeah, something like that, right? Like,
Yeah.
a split rate is gonna have its own opportunities and threats. A residential exemption is gonna have its opportunities and threats. And I think they're orthogonal enough that we can talk about them one at a time without having to worry about how do they combine, right?
Right.
Uh,
So is that
So
gonna
I
be,
suppose we could just tack that, instead of having it as a standalone, we could tack it into each of the sections. Part of my thought in putting it there at the end was as kind of a conclusion. I suppose the alternative would be to pull those paragraphs out into something like an executive summary.
so is that something that you envision doing as a live exercise at the next meeting? Or-
I was thinking more the 27th.
Okay.
Just
That may
because I
be a
think
good
it'll
exercise
take.
to try to achieve consensus
Yeah.
within
Yeah.
our,
Or, I'm sorry, not the the 25th.
Looking at the 27th,
Whatever,
thinking,
whatever.
I've given away the game. We'll get to the 27th later tonight. But yeah, I think next week's a little bit early, although if people wanted to start writing things up for distribution to let people think about it and see, what points they agree with, what points they disagree with, that probably wouldn't be a bad idea for next week.
Do you want it in a chart form?
I think that whatever's congenial for you, right? Write it the way you write. We'll read it.
But for a presentation at the
Oh,
end?
I'm sorry. For a presentation at the end, I don't know. I hadn't
Okay,
visualized it.
sounds good.
I'm open to either or any.
Okay.
This needs to be substantially written and put together next week,
Next
so that
week.
we have the week in between to edit.
To fine tune.
To fine-tune and edit.
Yeah, that's why I'm holding off, that's why I thought we'd hold off on the SWAT stuff for a week. Let's focus on the factual stuff this
Okay.
next week.
So, just a final question for me.
Yeah.
Is the goal for October 1st actually have the whole report done, or is it a presentation? What, is it a deliverable, or is it just like an update, or?
It's a good question.
You're gonna do 50 pages. You better give it to them by the 1st, completely done, so that they can have a month to read it. With everything else
Oh, I
they
think
do.
they're fast readers.
Oh, okay.
And they're not gonna be doing anything, they
They
won't
have
have
nothing
anything
to
else
do.
on their plate in the
Right,
middle of
that's
October.
what I meant.
Read it during town meeting.
The thing is, if we want them to make a real decision about the residential exemption, I don't know how,
So that's
how
the
much
only
later we
reason
can,
that the-
how much later we can go.
That's the only driving factor for October
That,
1st?
that I think is what's setting the timetable, yeah.
So
I,
may-
I suppose what we could do is a presentation on October 1st and take feedback from them if they want to give us some direction, if there are things that they want to see a little bit more information on, then we could try to deliver something on whatever the fourth Monday is probably, right? To them, and they could potentially take a vote, at least on the residential exemption, that same Monday. The vote on the residential exemption does not necessarily need to be taken at the same time as the final rate is set. It's just hard for me to understand how you can do that without some kind of global view of what your intent is. Right? How can you say we're gonna give a residential exemption if you don't know if there's going to be a split rate or if you're gonna increase other exemptions?
So did they want to do this, make their decision before town meeting? Does that
No,
come into play at all?
again, what we heard early on from Frank and Paul
Okay,
is that the assessor's office, if they're going to be asked to present the data for a residential exemption, needs the time to put that together before the final rate has to be set in what, end of November, beginning of December?
That's right. I submit all my information to the Department of Revenue, having basically the valuation certified. Then I come before the selectmen. They make, they vote on these four items, actually. At that time, that generally takes place in very early November or late October. The policy has been in place for some time now that there's a 2-week public hearing in between. In certain circumstances, that's been waived. I don't think that will be the case this year.
Not
but
this year, yeah.
So it'll be sometime in November that they'll actually take the vote, and then final financials are sent into the DOR for a tax rate.
So if they want to take the vote before Thanksgiving, that means they need to open their hearing probably the first week of November.
okay.
That means we have to be out of there at the very latest, the last week of October, and you figure there's probably 2 Mondays gone for town meeting in October. We really are pretty constrained in terms of delivering on the 1st.
That's what I thought.
Plus you got a holiday in October, Monday holiday.
Right,
Oh,
yeah, you've got Columbus Day, and then you've got night 1 and potentially night 3 of town meeting.
I think you probably have 4 or 5 after last night.
So let's see where we get to, okay? But yeah, my intent is to have a report ready October 1st. If we get to the 25th and decide we absolutely positively need another week or two, I'm willing to be open to that, but I think we need to at least do a presentation on the 1st, laying out where we are and maybe at that point getting final feedback from them to make sure we don't, if we're going to take extra time, I want to make sure we give them everything they're looking for.
speaking of everything they're looking for, one suggestion for an addition to the outline, not much work required other than formatting surrounding community profiles.
So
As in the data we have.
that would mostly be for the split rate, right?
No, I'm talking about all of the data that we have on the 33 surrounding communities. Throw it in the appendix. It may or may not inform anything, but I
You mean
think.
that one chart with the 3 categories?
No, the big table with the 33 communities, and then there were like about
Circle
20
1,
data
circle 2,
fields.
circle 3.
Yeah.
Yeah.
The chart that's in here effectively, so I assume that's what.
Yeah.
No. It's the one that I presented a couple of months ago that had mostly data from the Census Bureau about the 33 communities.
Yeah, looking at per capita income, that sort of thing, but it could be married to that as well, to give kind of a more complete overview
This
around us.
Okay,
What's it look like?
that's someplace
Oh,
in here.
okay.
Yeah.
There's too many pieces of paper, I'm sorry.
Why does that have to be in an appendix?
Well,
yeah, but-
I mean, if you'd rather have it somewhere else, we can put it somewhere else. I just thought it was the kind of thing that probably would disrupt the flow of the prose, and I'm not really clear how much it's going to inform anybody's decision. It's just like, okay, here's some data that you may or may not find interesting.
Right. Yeah, that's exactly what an appendix is for.
It's going to be a large appendix.
Most of the prior reports were largely that way as well.
Yep.
Okay.
So I don't have a problem with that. Okay. Anything else on kind of the format? It's time to write. Okay, presentations and questions. Yeah, so you have a printout from a revised tax policy scenario calculator. There were 2 changes made. Frank updated it to include the residential mixed-use numbers, which was something we'd been talking about. Sorry, it's this table of numbers.
I think I only have one page.
Okay.
Yeah, just one page.
Yes, just
It
one.
is
page.
just one page, okay.
The other change was that when you did multiple rate changes, specifically the residential change and the split rate, the rate for the residential didn't update. It used the old rate. So you see what you've got is on the top the new and improved version, on the bottom the old version that we put out at public input. You can see the only difference is in that first set of numbers. John pointed out that my heading is wrong. It says residential owner occupied tax with split plus SCE. It should be tax with split plus SCE plus RE. Top and bottom. In fact, for all of them.
So this is a scenario for us.
This is
having a-
all 3 things happening at the same
Okay.
time. A 1.1 split rate, a 10% small commercial exemption, and a 10% residential exemption.
Okay.
The numbers for the eligible and non-eligible CIP parcels did not change.
Okay.
But for the
So
residential.
that'll be a heading
Yes,
here,
uh-huh,
scenario
right.
4, not necessarily
Yes,
here.
right.
Just cross it, so you
Right.
get the concept that is,
Mm-hmm.
applies to everything, okay.
So you can see the differences there. The increases are a little bit bigger for the non-owner occupied
And the,
sides, and the savings are a little bit bigger for the owner occupied
and,
residences.
and that's comparing it with the current taxes paid under a single tax
That's right.
rate.
This is for 2018 values. Not just
Okay.
the tax rate, but all of the underlying assumptions, including kind of the proportion of owner-occupied residences.
Say that again, Mike.
So buried inside this tax scenario calculator are assumptions about how many single-family houses are owner-occupied.
Oh, okay.
Right, so, you know, this is the best we're going to be able to do, but it's not exact.
Okay.
Anyway, so I wanted to update that. Not a big difference. Sheila, you and I will talk about, I'll have an addendum or whatever you call it, corrigendum, for FinCom tomorrow night. So
Okay.
it's that one
Great.
slide that's wrong. All right, John, you guys have a one page in there that is a summary of a much larger spreadsheet that John put together, talking about the effect of
I don't have that.
a tax rate.
I don't have it. Thank you.
There's one more.
Okay, there you go. We're all set?
Thanks.
I'm up?
You're
Okay,
up.
okay, so what motivated this was that quite a few weeks ago, I cited a couple of papers that cited studies that said that the state and local taxes paid by corporations represent roughly 2% of the cost of doing business. And Tom brought up the valid point at the time that, well, okay, but it's going to depend on the size of the business. And so I was curious, well, how much is it going to matter? So it turned out that the original data used by the study was from the Internal Revenue Service. It's called Statistics on Income. And they actually do break things down by the size of the business receipts. And so using that data where they provide all of the many different costs of doing business, and I was able to calculate the cost of each of those as a percentage of the overall cost of doing business, and also as a cost of the deductions that the businesses take. Anyway, the bottom line is, yes, there is a fairly significant variation with respect to taxes paid. Those are the taxes paid that are deductible, which is primarily state and local taxes. But it didn't actually vary as much as I might have thought it would. So you can see where the number of 2% comes from. It's around 2% overall. For very large corporations, it's much lower than that. For smaller corporations, it's up, in some cases close to 4%. And in the case of a very small company, it's almost 5%. I included also some of the other major cost items for firms. In particular, I wanted to include rent because for some of these firms, some of the state and local taxes they pay actually could be factored into their rent. So that's something else to be considered. And then the last thing I did was I just wanted to get a sense for, well, okay, given what their cost structure looks like, if I referred to it as a $1,000 increase in property taxes, but it could be a $1,000 increase in anything, what would that be as a percentage of their total deductions? And so that's what that last row is. Although I would say if you're talking about the bigger businesses, you might want to use $10,000 instead of $1,000. But you can see it's not really, it's not really that much of a change with respect to their total deductions or their cost structure.
So, John, I was looking at this very lengthy spreadsheet earlier that when Mike had sent it out to us, and a lot of information. My question, I didn't get a chance to read in detail because it was too late in the afternoon, but these numbers are numbers from taxable corporations or any kind of business?
It's based on tax return data, so, okay.
All right, so
yeah,
where I'm going with this is a lot of small businesses, and it's, I think the small businesses that concerns me in town that are impacted by, could be negatively impacted by a split rate, are businesses that are taxed on personal tax returns. They're single member.
I'd have to believe those are not included in this.
Right, that's what I'm
Yep,
getting at.
yep.
So there's single member LLCs, there's sole proprietorships. You wouldn't see that data in here, so that's kind of where I was going when you had brought the statistic up before. I don't disagree with this information, but I think it's skewed in terms of talking about the small business community. It's a different population, really. You don't see small businesses for the most part, and you can ask any tax accountant that file or that start a company as a corporation. Most small businesses now are started as LLCs. Most of them are single-member LLCs, and those LLCs are reported on personal tax returns under Schedule C or Schedule E income.
Would you expect their cost profile to be significantly different than a C corp?
I think
Of a similar size?
Well, so, when you talk about taxes and how it impacts real estate, when you're talking about a property owner who owns, a small retail shop, maybe a small apartment building or a mixed-use building, that percentage of revenue, not percentage of cost, that percentage of revenue that they're paying in taxes is significant. It's more than 2, 3, 4%. I should do my own statistical analysis on my portfolio and come up with something, but it's a big number. The joke is, in my industry, the two highest expenses are, number one, interest, number two is taxes. And when we look at borrowers trying to cover their debt service and their operational load, so to speak, those are the two numbers we focus on all the time.
One thing we could look at, I don't have the full data set in front of me,
Yeah.
but I mean, clearly, some companies filing as businesses,
Yeah,
corporations.
it's probably older.
But the data table would tell us actually how many there are. so we
Right,
can-
no, yeah, I did see that too. Let me see if I can pull that up. Really small print here. So number of returns for under 25,000 in revenue, that's what they're saying. Well, let's do it this way. Total number of returns was 4,300,000. Total under 25,000 was 1 million, and that number, declines significantly as you get out into the higher revenue numbers. 10 million and over, 80,000.
But you said it was something like 1 million for under 25,000?
A million, yeah. So number of returns they looked at. This sample was 1,001,465.
Yeah. Do you have a sense for how big that number actually is? Okay, I don't know.
I'm surprised at that, to be honest with you.
That it's that big, or?
Yeah, that it's that big. And this is for the state, or is this?
No, that's for the United States.
Then I'm not
Okay.
surprised then. No.
Okay. Yeah, so just a couple of other thoughts that I had along with that. Tom, we've already talked about your kind of breakdown of how a change in tax rate would affect the valuation
Yep.
of the businesses. And I think one of the things that John had put together back long ago was the story, the CIP stories. That when we were looking at other towns initially adopting a split rate, he put together a document that kind of talked about in qualitative terms whether the CIP shares of those towns went up or down after the split rate was adopted, and I think that is something that we can try to fit back in to the split rate write-up as well.
The thing about that topic, though, is, and John, you said it perfectly, I mean, it's if all else is equal. I mean,
Right.
when you look at a town that increased or went to a split rate and then changed their zoning, for instance, to more commercial, how do you extrapolate or cull out that information to say, this is the effect of a split
Yep.
rate?
No, I kind of agree with that, except the only way to try to deal with it at all is to amass as much data as you can. And
Right, so my dummying down of this whole scenario is just a mathematical process.
which I think
Forget
is
it,
valuable.
assuming everything's equal. So, and let's just say in Chelmsford, for instance,
Yeah.
let's just say that, 129 took off, we rezoned Route 40, those two events in and of themselves are gonna lift up the valuation and tax base, right? Forget about doing anything else. But if we just look at mathematically, if you decrease the numerator and increase the denominator, it reduces. It's just a mathematical fact, right? If you believe in the theory of math, I think everybody
Right.
does. It's just, that's a mathematical fact. Other things can happen, but the truth of the matter is, you know, it's a proof is in the pudding, it's in the math.
One other data point on this topic. I'm not even sure who sent this out. There's Kingston's homestead tax system. I thought it might have been you.
I probably did. You asked
Okay.
me why I did.
No, I just asked if you.
I
No,
replied to you.
no, I asked you if you did, and you didn't.
I don't know if I sent it out to everybody.
Anyway, so when you hear the word homestead, think classification. This is in a county in New York State. And a couple of observations they made in this study, it says, one study of this homestead tax system found no statistical relationship between non-homestead property values and non-homestead property tax rates. And then later they say, in this area, it's the Mid-Hudson Valley, cities that use the homestead property tax system have higher non-homestead commercial property value growth rates than all but one of the cities that did not use the homestead system, that used a single tax rate system.
But you don't know what else is going on.
No, you're absolutely right. You're absolutely
Right, that could be a chicken and egg thing. I mean,
Right,
maybe the
right.
ones that are getting good growth respond to that by putting,
Yeah. I mean, you just,
I agree. Again, all we can do is look at the available data and try to look at it from every possible perspective so that we're, I mean, I can't just walk away and say, you know, it's too complicated, right? Or every situation has individual factors or variables. I have to believe that at some point, if you get a big enough N, trends start to occur. Or if no trends occur at all, then that's a takeaway as well, that it really is stochastic, that it really is determined by kind of facts on the ground. But I think that's a sort of knowledge as well, that if there are no hard and fast rules, you have to be more responsive, you have to be faster on your feet, is my takeaway from something like that. The only other thing, I think, and I put it in, I did not mail it out, but I did put it in your handouts, are these distributions that Evan was asking about, the small commercial exemption. I have not done the residential properties yet, but I just started breaking them down into bins, trying to get a sense of, you know, again, how many big, little, and medium property values are there. I did try to line up the histograms. The personal property I had to break down a little bit farther. Below 50,000 was just a really big category. So I broke it down into 5 to 10,000, 10 to 20,000, and 20 to 50,000. I don't know if you'll find it useful or not.
Does this information exist for, like, the last 10 years? Or, you know, over a period of time?
Presumably somewhere.
Evaluations throughout the.
Yeah, the data dump, yeah.
Yes.
Okay.
10 years?
I'm just, I mean, does it provide any value?
How many, it's something like 30,000 records, right? So, maybe not all at once. Yeah, do you want to see something like that? Maybe.
This is the assessed value of commercial property.
That's right.
Okay.
Yep. In town.
I think it's pretty interesting because it will help us understand what is or what has been going on. Maybe there isn't any change. But it helps us tell the story, what's going on in Chelmsford.
Right.
And I think
this
as
is
we,
just Chelmsford.
This is just
I think as we
Chelmsford.
know at this point, all else being equal, that we can only define that in
Yeah,
Chelmsford.
right. So the only other thing, and Frank, let me ask you, how hard would it be to get this kind of information for, say, Billerica or Westford?
Let me just appeal to that data dump like you're talking
Yeah,
about. Shoot them an email, see what they do. It should,
At least,
it's a simple query, it's really.
right, at least for FY18, just to see if there's something like a fingerprint to a community, and its businesses. I kind of agree with Evan, yeah, if we could look at this on some kind of a rolling basis, that would be good, I think, as well, just to see if we can pinpoint changes, or maybe it's been relatively stable over the last 5 or 10 years. Yeah, like you say, if it's a single query, and if you separate out even just the commercial and industrial properties, it's not a great deal of data. It's a pretty quick Excel spreadsheet calculation.
Frank, could I ask you a question? Is there a way for you to compile tax expense to valuation as a percentage of value?
Ooh,
In the,
that's a good question.
Yeah, the tax obligation is a percentage of the,
yeah,
simple expense.
that would be awesome if that's something you could provide us.
So, how many properties do you want to look at for something like that? So that was one of the ideas behind this commercial, behind this distribution breakdown.
Yep.
Should we just select a $50,000 property, a $500,000 property I mean,
Well, so in the commercial world, well, I guess it doesn't matter, valuation's valuation, so it's a,
Right.
yeah.
You just put
I'm
it-
I'm thinking cap rate is gonna value, but you already got the value.
What I can get you, Tom, is what I've seen in some appellate tax board cases. The commissioner will listen to both appeals and then ultimately arrive at his or her decision. And in the body of the report, have an appraisal that they've cobbled together from different parts, or their own data. And in there will be some information regarding cap rates and the handling of cap rates, how they got that. So that might be helpful for some of you.
Yeah, but on it, just getting back to the percentage of valuation, I think that would help. You know, in terms of, so $50,000, we're talking personal property, really. We're not talking real estate at that level. Commercial
right,
real estate.
right.
So, I mean, I'd probably do something like from 250 to 2 million.
Yeah.
You know, that would be a good range of I think, of commercial valuation.
And you'd like to just see,
What the
just so I
percentage of-
understand, like a CSV file, each property valuation
Actually,
plus,
you know what, that's not gonna work either, because what I'm looking for is the tax expense as a percentage of income.
Yeah.
Yeah.
I don't know.
Yeah,
you can't back the income out of the filings.
Yep.
What about the ones who actually return their questionnaire?
Well,
I mean, we could look,
Not that far. These properties, I've developed an income, once again, getting to the commercial properties.
Yeah.
I've developed an income approach. Within there is, starting out, I get to the NOI eventually.
right.
And then the GPI to begin with, so that's available to me. I don't know how easy it would be for me to go back in time very much. I've never attempted that.
Even if you just, I think where you're going, Mike, makes a lot of sense. Just, pluck out a couple of properties from, some different valuations.
Yeah.
Don't go,
Good cross-section
crazy.
of the,
yeah,
let me see what I can do with that.
because, no. Valuation's a function of the NOI, but,
The information I would be giving you is the market information, not necessarily specific, real experience with the different parcels.
correct.
Okay. As you know, right? Yeah. I'll try and give a, good cross-section of the commercial, industrial, and then various.
And I guess I would be focusing more on, I personally, I'm not interested in the $10 million properties, because I think that there's no issue, I think, with them absorbing whatever,
Yeah.
is gonna happen. It's really the small business community that I'm
Yeah,
concerned about.
Retail and that kind of.
Yeah, and again, it's just, it's investment property owners, not necessarily owner-occupied business operators, it's the,
Investor, yeah. Right.
thank you.
Okay, the only other thing I had under committee member presentations and questions was to ask Frank if you had anything you wanted to tell us. Okay.
Any other action items for me?
No, but yeah, stick around. We'll go through it. We'll go through them at the end. Okay.
Fine.
Oh, sure.
I'd just like to make an observation that the week that Mary ran the meeting, we got over really early. I just want to make that observation.
We get very short
No
agenda.
pressure.
We
No
don't-
pressure.
Efficient.
Okay, but actually we are moving along, and so upcoming meeting dates and topics. We're still on with Mr. Power
Yes.
for the 25th. We are, as we've already discussed, we are targeting 10/1, the selectmen meeting on October 1st for our presentation. And I was gonna ask you all tonight to see if you can clear the 27th, which would be the Thursday after Tuesday, the 25th, if we need another night. We may or may not be able to get the room, but, I mean, I think we can all kind of see where the schedule is taking us. Yeah.
I give it my bridge night, is what I do.
All right,
Happens.
Golf
So-
league's over for me, so I'm available.
okay. But let's try to keep Mary's bridge game intact. Let's
No,
just
it's
aim
okay.
for that. But we'll see how next Tuesday goes and the discussion on the 25th. I just hate to be caught short.
You may need another night.
Okay. Action items, I need to get you that 2006 number still. Evan, if you didn't send me that Kingston Homestead report, will you, or just send it to the whole committee, you don't have to go through me on that. If,
The one that he just
yeah,
referenced?
Want me to?
I think I sent it to you because I put in the email, you may find this interesting, which clearly you did. I'm not sure it was of any
Okay.
value to,
I'll take the action item.
if you want to.
you want it? All right.
Okay, so,
Would you rather take it?
You probably have it more
Okay.
handy than I do.
Frank, you and Tom are going to work out some kind of number that will explain it all clearly and succinctly. We're also going to through you ask Bill Ricca and Westford for at least a commercial and industrial property list and valuation for FY18. I think we just need 1 year there, and then if we could do a Chelmsford dump for like the last 5 years, that would also be helpful. Oh, you know what? I skipped right over public comments. Is there anyone here who would like to address the committee at this time? I guess I knew what I was doing. Okay, press questions, there do not seem to be any, so,
Move to adjourn.
So moved.
all in favor?
Aye.
Opposed?